తెలుగు సంఘం క్యాట్స్ అందిస్తోంది కనివిని ఎరుగని వేడుక కళాకారులకు కానుక ప్రతిభా పరిచయ వేదిక కళలనే ఆదరించంగా కళాకారులను ఆదుకోవంగా తెలుగు ప్రముఖులే అతిథులుగా ఇది సకల కళల సంజీవనిగా కళల సేవకై పూనుకున్న రంగం ఇది రాజధాని ప్రాంతీయ తెలుగు సంఘం కళల సేవకై పూనుకున్న రంగం రాజధాని ప్రాంతీయ తెలుగు సంఘం కళా సంజీవని క్యాట్స్ అందిస్తోంది కనివిని ఎరుగని వేడుక కళాకారులకు కానుక ప్రతిభా పరిచయ వేదిక కళలనే ఆదరించంగా కళాకారులను ఆదుకోవంగా తెలుగు ప్రముఖులే అతిథులుగా ఇది సకల కళల సంజీవనిగా కళల సేవకై పూనుకున్న రంగం ఇది రాజధాని ప్రాంతీయ తెలుగు సంఘం క్యాట్స్ అందిస్తోంది కనివిని ఎరుగని వేడుక కళాకారులకు కానుక ప్రతిభా పరిచయ వేదిక కళలనే ఆదరించంగా కళాకారులను ఆదుకోవంగా తెలుగు ప్రముఖులే అతిథులుగా ఇది సకల కళల సంజీవనిగా కళల సేవకై పూనుకున్న రంగం ఇది రాజధాని ప్రాంతీయ తెలుగు సంఘం కళల సేవకై పూనుకున్న రంగం రాజధాని ప్రాంతీయ తెలుగు సంఘం కళా సంజీవని క్యాట్స్ అందిస్తోంది కనివిని ఎరుగని వేడుక కళాకారులకు కానుక ప్రతిభా పరిచయ వేదిక కళలనే ఆదరించంగా కళాకారులను ఆదుకోవంగా తెలుగు ప్రముఖులే అతిథులుగా ఇది సకల కళల సంజీవనిగా కళల సేవకై పూనుకున్న రంగం ఇది రాజధాని ప్రాంతీయ తెలుగు సంఘం క్యాట్స్ అందిస్తోంది కనివిని ఎరుగని వేడుక కళాకారులకు కానుక ప్రతిభా పరిచయ వేదిక కళలనే ఆదరించంగా కళాకారులను ఆదుకోవంగా తెలుగు ప్రముఖులే అతిథులుగా ఇది సకల కళల సంజీవనిగా కళల సేవకై పూనుకున్న రంగం ఇది రాజధాని ప్రాంతీయ తెలుగు సంఘం కళల సేవకై పూనుకున్న రంగం రాజధాని ప్రాంతీయ తెలుగు సంఘం కళా సంజీవని క్యాట్స్ అందిస్తోంది కనివిని ఎరుగని వేడుక కళాకారులకు కానుక ప్రతిభా పరిచయ వేదిక కళలనే ఆదరించంగా కళాకారులను ఆదుకోవంగా తెలుగు ప్రముఖులే అతిథులుగా ఇది సకల కళల సంజీవనిగా కళల సేవకై పూనుకున్న రంగం ఇది రాజధాని ప్రాంతీయ తెలుగు సంఘం క్యాట్స్ అందిస్తోంది కనివిని ఎరుగని వేడుక కళాకారులకు కానుక ప్రతిభా పరిచయ వేదిక కళలనే ఆదరించంగా కళాకారులను ఆదుకోవంగా తెలుగు ప్రముఖులే అతిథులుగా ఇది సకల కళల సంజీవనిగా కళల సేవకై పూనుకున్న రంగం ఇది రాజధాని ప్రాంతీయ తెలుగు సంఘం కళల సేవకై పూనుకున్న రంగం రాజధాని ప్రాంతీయ తెలుగు సంఘం కళా సంజీవని క్యాట్స్ అందిస్తోంది పొందిక కనివిని ఎరుగని వేడుక కళాకారులకు కానుక ప్రతిభా పరిచయ వేదిక కళలనే ఆదరించంగా కళాకారులను ఆదుకోవంగా తెలుగు ప్రముఖులే అతిథులుగా ఇది సకల కళల సంజీవనిగా కళల సేవకై పూనుకున్న రంగం ఇది రాజధాని ప్రాంతీయ తెలుగు సంఘం.
Good evening, everybody. This is Nallu Chittaranjan from CATS, Capital Area Telugu Society. Thanks for joining CATS Personal Financial Management Series. Today we will be joined by Venu Ilavala Garu of TTI Capital LLC. He's going to present on a topic which we advertise, which is basically investing in multifamily properties, real estate. This is an educational session. We are not seeking investment or anything today. People, after getting educated, if they are interested, they can definitely reach out to him, and on a personal basis, you can pursue any investments with their firm. As normally, we need to do a disclaimer. CATS is not a certified financial advisor. The content that is being shared today is for information purposes only. We should not construe this information as legal, tax, investment, financial, or any other advice. As I said before, today we have invited TTI Capital LLC as a sponsor of that to present this topic. With that, I will hand over and invite Venu Ilavala Garu to take control and present the rest of the presentation. Thank you. Venu Garu?
Yeah, thank you, Andy. Thank you, Niranjan Garu. Maka ee opportunity ichinanduku. So, nenu
Hello.
Yeah, Ravi, are you there?
Yes, Venu, I'm here.
Yeah. Sir, Niranjan Garu ఒకసారి కన్ఫర్మ్ చేస్తారా నా స్క్రీన్?
Venu Garu, కనబడుతుందండి మీ స్క్రీన్. ప్రొసీడ్. థ్యాంక్ యూ.
Okay. So today we are going to give a demo on multifamily investment opportunities and how to find the property, how to invest, how to improve your passive income, and we will take questions and answers at the end of the presentation. And I have my partner Ravi on the call, so he will pitch in whenever we will both together present this all the presentation. And we are here in Washington DC. We have started this like almost 7-8 years back, and we have good experience on this, and we hold almost 2,000 units, and it's a good passive income source for the investments. So let's start. So it's a proprietary statement, you guys can read. Yeah, about our company is TTI Capital. As I said, we are in Reston here. Normally we will acquire active asset and actively asset manage multifamily assets, basically apartment complexes. We buy whole apartment complex and we manage it, and we improve that community and raise the rents, and we will select in the emerging markets, and we hold 2,000 plus units as of now: North Carolina, South Carolina, Georgia, Florida, and Texas. So our company has a lot of other experienced guys who have very good experience, and our core competencies include acquisitions and repositioning is a major what we do. We are venturing into the construction now, and also disposition and capital restructuring also we are doing right now. So we have like very good experience on this. And today agenda, why apartments? Why only we are talking about apartments here? Where to buy, when to buy, and what to buy, and how we can decide to buy a property. So that's that's very important to learn. We don't have to buy wherever we want. We have to buy where supposed to buy to get a profit. So buying is very important in this business. When you don't buy at the right price, you don't make money. That's very crucial. So I just give a background of what we do. Residential, we buy, rent, hold, and flip and hold for rents for some time. This is a time consuming. You cannot manage 100 to 100. This is like, sometimes you get a good opportunity to buy and hold and sell it. It's depending on the markets, and it's like there are a lot of things on a single family. Single family values will be decided by area, schools, and the place where all the majorly for us Indians are there. There are a lot of things, but multifamily is totally different. It's nothing to do with like multifamily. So it is a commercially viable business model. We buy, upgrade, and rent, and also we buy, upgrade, flip. We have ideas of storage, and we have medical offices already. It's a collaborative, invest as a group, and we can buy a larger properties and longer cycles. It's not a short term. It's going to be holding of 3 to 5 years hold. So it need a very good amount of the investment for equity. So let us say if we are buying 20 million property, we need 6-7 millions of equity requirement. So it is very big in terms of the money. And why apartments? Why I am talking about apartments here is the best. Everyone needs home to stay, and whatever the conditions are, like is a up market, a down market, bust market. So we have to have a house. So, and also our break even is 70% occupancy, and no major market swings. Normally the swings are very slow, not like other share market and single family houses. You can scale economically, and you can have we are talking about now. So we can have more than few doors we can hold, and you can spread the risk, and you can get a more profit when you have a good improvement in rent. So value of an apartment complex depends on the net income that complex generates. As we increase the net income, the complex value goes up. So compared to a single family house rent doesn't match at all. Even you buy million house, you may be renting for 3,000, 4,000, and even you buy a townhouse for 400 some places, you also get 2,500 like that. So it won't match your investment return. But a multifamily, the more income you get, the more profit you get. It doesn't matter where the house is, where the property is, and what the school district is, what is the market condition, whether it's a job market is gone, or share market is not there, or whatever condition it may be. It only values on net income it generates. And there are a lot of tax advantages on the returns. You can do 1031 exchange. In the rental property, what we have to pay tax. But here you can do the 1031 exchange, and you can depreciate building in an accelerated rate over 1 or 5 years. And capital expenditures are tax deductible. So when you buy the property, you spend to raise the rents, and that is tax deductible. You can tax deduct that amount. So normally what happens that in this business you get a negative K1s, and that will benefit you in every year tax returns. So your bracket will come down from 32 to 28, 28 to 24, like that. So that's a more tax breaks you get it. There are a lot of things, capital expenditure we can deduct. That's as per the law. So these are the market swings, and we follow market swings to buy the properties and sell the property in particular area. And normally we start buying at buyer's market 2 around, and we start selling at seller's market 1. And we will try to leave some meat on the bone at a seller's market 2, so that we can safely come out of the market. And these swings will be around 80 to 10 years. So we will follow these swings, and this is the market emerging market analysis, and it's available in Google. You can Google it, what is emerging markets for multifamily. It's freely available and you can read everything. And target markets. As of Q2, secondary tertiary markets in Southeast and Southwest, yes, Charlotte, Charleston, Gainesville, Florida, Athens, San Antonio, and those are the markets we target. We don't just buy wherever we want. We go and buy the markets where people are moving into, and job market is good, and low cost areas, so that people are moving to that area, and and also criteria. MSA population has to be 250K, and crime index has to be some certain level, and should be one interstate connectivity. So one interstate highway has to pass through the city, and should have airport nearby within 30 minutes. Those are the criteria we select the place where we want to buy. And growth in the city where we want to buy, we will do 10 plus consecutive year over year data. Population growth has to be 2% over, job growth is more than 2%, and income growth is 2%, and value growth is supposed to be property value growth at least 5%. So with this criteria, it falls under, some cities will fall, especially Charlotte and Charleston, South Carolina, and all those cities are 100 to 100K people are moving every year from north to south, either retirees, or they want to see cheap housing market, or they have fed up with big cities and moving to the south. So this is happening last 10 years. If you look at the New York and Chicago and all big cities, their population are losing. They are losing population. So people are moving to the south. Now with the pandemic, now even it's more. People don't want to get into the big cities. They want to go to the small cities and live freely. They fed up with the traffic or some pollution or something, housing expenses. So there are so many things. Retirees are going for the hot weather. There are a lot of things. This is the public information, and you can just Google it, what happening in those cities, you will know. There are a lot of newsletters will come from broker office, CRB, and there are a lot of, if you Google it, you will get all the links. And what type of apartments we look for, why we look for particular apartments. So basically, we will divide the apartment complexes and neighborhoods, class A, B, C, D. So class A is less than 10 years. It's a brand new, and it has a very good amenities and swimming pool and a gym and internet cafe, and there is no limit. You can put a lot of them. That's called class A, and we are targeting now class A, and class B between 10 to 25 years, and it's a class A location and class B location, and it's a class A. We target them so that it won't be even, let's see, okay, we We will not go to the anything class B, which is in a class C area, because even you improve the surroundings, you cannot improve. So we will make sure we buy in a we should buy in a class B location. You cannot buy class B location in property of class C. So you cannot go down the area, because even you improve, you won't get a good tenants. So you have to make sure you buy the right area also. And class C is 25 to class C age is 25 to 40 years old, and we buy class C's in BA, but we will choose and pick class C areas. Sometimes it will be very cheap and it will be quick turn. So those we look for, but we may not prefer that much. Okay, so but you always be buying in the area class B and class B apartments. Don't go down to the class C, so that will not get your good returns. So I know we have a question. Some of them will have a questions, and we will have at the end of the session we'll have a lot of questions. Apartment size, unit mix, and apartment sizes. So we should buy at least 150 and more apartments, so you can offer a full-time on-site property manager and maintenance person. Otherwise, what happens that if you buy less than that number, the numbers don't support to have a manager and a maintenance guy. That will pull yourself to the property and it kills your time. So the idea is it's supposed to be passive income for us, and we should not be there to manage it. So you will have a problem to grow. You can end up with maintaining a 40-door property. So you should not do that. You never do that. You have to go minimum 150 and keep buying more than that, so that you can offer a management. You manage the managers. You don't go and manage that. So unit mix, you should have a good unit mix, 1:2, 1 bedroom and 2 bedroom, because 1 bedroom always will have a more turnover problem, and 2 bedroom or 3 bedroom will have families, so they don't move out quickly. Once they come in, they stay for a while. So turnover cost also will hit your profits. And by apartments, the average square feet of 800 or more, because so that will avoid studios, and also it will have 2 bedrooms and bigger size, so that you can charge more rent per square feet as per the per square feet rate. So these are the things which you remember when you are trying to look for the property. So how to buy? What are the strategies when you go in to buy a property and try to acquire it? What you look for? Value play or momentum play? We both use both of them. Value play, we always look for the lower rent property where neighbors are charging more than that. We can increase the rents and decrease the expenses, is always the case, and add income sources like laundry facility, vending machines, and pet fees. And if there is no water meters installed for each unit, we go install and charge them. So these are the every income, every dollar you charge, you make, it's a $15 to $16 profit at the sale price. So it trades around 16 times from the income. Additional income, we spoke about it. Add value. So we normally renovate interiors, add amenities like pools. I think I said before, lot of amenities we can add, and so that we can charge more. People like to have in complex exercise and pool, the laundries, and so on. So there is no limit. So as long as the property and tenant support, you can put children parks and lot other things. And momentum play. Let me go back to the value play. In value play, as I said before, we go and buy areas where we can have more rents around the area, and we look for the properties where they are charging less. So those we identify, and we will do the research and normally broker give all the information is a public information, and it's easy to know that the property is charging less. So that's very important to look. That's the first thing you need to look. And momentum play, this is like emerging market. It's a booming Charlotte. We acquired in Charlotte in 2016 one property without doing much. Whatever I'm telling on top, it just gone the roof. So you have to research on that. It's available, and there are a lot of research reports online. You can Google it. It's a very public information, and you will know what is the city is booming, what is the employment there last 5 years, what is the population growth in 5 years, how the housing market. You can pick up the phone and call the county and ask whether they need, what is the portion of the affordable housing and apartments, how busy they are, and they will tell you a lot of information. So this is the public information you can use for momentum play, and sometimes it gives a windfall. And we may share that later. And trade up fast moving market. You buy the small properties and buy sell that and get the more door property and rehab it and sell it. So you can do like 8 years, 9 years, and it will take anywhere 2 to 3 years to rehab and stabilize any property you take it. So it's not easy. Tomorrow you can sell it. Maybe if you are lucky, out of 5 complexes, maybe 1 or 2 you will have a very good returns, but not all. So you have to stick to the 5 years plan and execute it properly, and create a big portfolio, like 1,000, 2,000, 3,000 depending on your capacity, and keep for the cash flows. This is basically a passive income without a tax. As I said before, you have a lot of tax benefits while holding this. So what happens is that a year end, when you send the K1 from this properties investment, the rental income will always show some negative, and the distributions goes as a equity return. So the K1 always you get a minus. So that will bring down your tax bracket, and also you get a every yearly return. So let's say one scenario that excited me to start this myself to invest first. I'm investor before I manage the properties. So let us say one scenario, you put 100 in 5 properties. So after 5 years, first year should be doubled, as per our analysis, our experience is supposed to be at least 20% return. That's a very, very low side of it. And we have 20 to 40, 50, 60, 100% also some of the properties. So let's talk conservatively. 100 should become in 5 years 200. Second year if you put, it's supposed to become 80 after 5 years. Like that, if you calculate, it is end up with 800 to 1 million. From that day onwards, after 6th year, it's supposed to be 80,000 to 100,000 of 8% cash flow, which normally in this business everybody gives 8% cash flow. So after 5 years, 6th year, you should get 80K passive income without much tax on it. So you can quit a job and do whatever you dream of from that day onwards. So I invested it. We are on that position right now, but we are even going beyond that. But that's something which everybody should consider. We invested so much places, and I don't think 80-90% people will stuck there and don't see the return. Maybe there are successful 10%. They are so lucky. They're in right place, right time. But this is something which is in US, which is in front of us, and it's better to pursue that. So yeah, we just spoke about it. Significant valuation, as I said, as we discussed, adding renovations, increase the rent, adding amenities, increase the rents, and cash flow, and increase the portfolio growth. So these are the things. You increase $1, the value of the property goes up to $16. So how it will increase? You will have a question. I will try to share another link to show you guys. Bear with me a few minutes. I need to get that. I'll take a questions after this. So I will try to show you a real case scenario. So I'm waiting to come up the screen. Okay. So this is a real case scenario. Just like an example, I'll show you the next real case scenario. We bought cap rate at 7.33. Cap rate means for $100, how much it makes. Each unit 50K, 150 units you bought, and acquisition price is 7.5 million. Net operating income 550, and the present value is 750. So how we can improve this? And we get a loan and we get equity, and we need to have a cash to close at this much, okay? And interest rate 5%. So I just calculated year one how we can, like, acquire a property. This is how the LTV banks give and how much money you need and all. So how the profit comes, and let's say we increased rent, each property, each unit 170 per month per unit, $77 in 5 years. Whenever you go to the property, like any apartment you rent, you ask for renewal, they will at least increase $25 or $20. So it's very easy. For 5 years you can increase 77 per month. So this is the increased rent increase. So now asset value, because of this, the net operating income increased 550 to 688. So that means it's a 130 into 16 times, and value goes up to 9 millions. So asset value now 9 millions, and cash available here written is 100%. In this is the 5th year. Okay, in 5 years you can achieve easily increasing the rent. Okay, so I will show you the real analysis right now, which our property, one of the property which we have bought in 2018. Yes, 2018. So hopefully you guys can see this. Can you guys? I hope you can see the numbers. It's very small. Sorry. So we bought this property at 16 million here in the down, and our net operating income is 1.197. Okay, so we increased the rent from 557 to currently. Actually, we passed this 5th year increase in the second year itself. So we are at 710. So the value of the property from 16 to it went up to almost 26 million. Okay, now it's around 25 million. So that's how you can increase the rent and decrease the cost. And you can always ask why the properties comes into the market, if there is a room for this increase. So there are a lot of criteria why property comes into the market. Maybe the owner is too old, he maintained for 30 years, he didn't want to get rid of it. And another scenario is he don't know is a market. He's like pop and mom shop. He maybe built it. He's his baby. He don't want to increase the rents. He just had something in his mind and don't want to increase the rent, but he want to sell it one day. And there are some people which eats the money and they don't improve the property. They don't increase the rents. They are afraid that they are spending too much. They might be missing the value. So those comes into the market. We try to find them. And there are something which somebody want to sell it desperately. He may be committed for the bigger property to own it. So he want to get rid of it. And there are a lot of scenarios why property comes into the market. So we will be researching on that, and we will see the less rent properties and so many criteria. We research on that before buying it. So this is the scenario, real scenario. This property we own in Lincolnton, North Carolina, and this is very good 315 units property. This is one scenario. So let me go back to the original. Okay, it's open for questions now.
So, okay, Venu garu, we have a couple of questions. Can you hear me? I'll read out.
We can hear you. Go ahead, Andy.
Yeah, there is a maybe delay. Questions will not come directly to me. CAT representative will have a questions and he might ask me so that I can answer back to you guys.
Okay, so the first question is, what is the minimum amount that can be invested in the fund? And can I invest more than the minimum?
So this is our team. So
Venu, did you get the question? Hello, Venu, can you hear me?
Hi, this is Ravi, Venu's partner. The minimum investment in the
so I'm
fund,
waiting for the questions.
and you could invest more than the minimum.
Sorry, this is not a straight a demo, so I have to wait for somebody to come in.
So, Venu garu, the first question is, what is the minimum amount that can be invested in the fund? Can they invest more than the minimum? Ravi garu, maybe you can respond.
Sure, Andy. The minimum investment in the fund is 25K. You could invest more than the minimum investment. That's not a problem.
Okay, there is another follow-up question is, when considering purchasing a property, how long do you spend on due diligence?
Okay, I'll walk you guys through a typical acquiring or acquisition process. It all starts with underwriting. Usually we underwrite 100 deals to find one deal which works or fits our framework. And once we find that deal, we submit a letter of intent, we get it under contract. And once we get it under contract, we usually have 30 days to complete our due diligence process. So the due diligence includes legal due diligence, financial due diligence, and physical due diligence. Legal due diligence consists of looking at the title, making sure legally it's all right. Financial due diligence includes whatever the property operating information which is provided to us is accurate. We also look at lease audits, and physical due diligence includes visiting the property, going through all the apartments, make sure what kind of repairs they need, making a list of everything that we need to do to improve that apartment complex. And then finally, we also do environmental, and we get other third-party reports to make sure everything checks out. So once the due diligence period is over, we have another 60 days to get the financing, and then once we get the financing in place, the acquisition process completes. So usually the cycles are long. From start to finish, it could take anywhere between 60 to 90 days. But prior to that, we spend at least 2 to 3 months in analyzing a lot of deals to find one deal which fits our criteria.
Okay, so the follow-up question is, do you share the details of potential investor, and how do you qualify a potential investor?
So we do not qualify investors. We don't. We don't require you to be an accredited investor. You could be a sophisticated investor as well to be part of our acquisition process. This is mainly done as a JV equity where we all buy together as a partnership. So this is not like a traditional fund. It's a private equity fund, but it's a JV model, and that is the reason why we would not need you to be an accredited investor.
Hello.
Hey Venu, go ahead and mute your line. I'll answer the questions.
నేను నా వాయిస్.
So are there any other follow-up questions, Sandy?
Yes, the next question is, what will one own when they make an investment?
So they own a piece of the property, right? For example, we go buy a 150 unit apartment complex, and to buy that,
పట్ల అదే ప్రాబ్లం.
Venu, please mute your line. And when we go 150 unit apartment complex, we may have to bring in $3 to $4 million to the table, but you as an individual investor, you may only contribute 100K. So your slice of ownership depends on your contribution to the overall pool of the money which is needed to buy the apartment complex.
Okay. Will there be any additional funding needed from investors year on year after the original investment to acquire the property for maintenance?
No. The way we underwrite it is we always have additional buffers. We make sure our underwriting is conservative so that even when we get surprises, that we have will take care of any surprises. So we don't do capital calls. And if say we run into a situation where we need to pump in money, Venu and we will pump in our personal money if that case arises.
Okay. So the next question would be, will I have an opportunity to review the investment property before the fund completes the acquisition of an investment?
Absolutely. We are going to have a webinar like this before every potential investment is acquired. We present it to our investor base. We tell them why this investment makes sense, what kind of returns that this investment could make based on our experience. So we'll have a full-on call, and based on that, investors decide to come in and they invest into the fund, and the fund makes acquisition of the property.
Okay. The next question would be, how will the fund be taxed?
The fund will be taxed as an LLC. Even though we name it as a fund, it will be taxed as an LLC on capital gains.
Okay, what tax form should I expect to receive?
Sorry, could you please repeat the question again?
What tax forms should I expect to receive?
At the end of the year, you will receive a form, a partnership return, because you are essentially a partner in this entire operation, not an investor.
Okay. The next question is, will I receive performance reporting to stay informed about my investment?
Yes, we provide every quarter. We provide distributions, which is equivalent to 2% of your investment, and we also provide financials of all the assets that the fund has acquired, and we also provide updates on all the assets that the fund currently owns. So there will be a newsletter, there will be distribution, there will be financials. And in between, we also have a lot of support communication channels, be it WhatsApp groups or emails that investors could reach out to us and ask questions about either a specific investment or a portfolio of investments.
Okay. The next question is, what fees do investors pay the manager for their investment in the fund?
The fund does not charge any administration charges, or it does not charge anything for the expenses. It is merely used as a way to diversify across multiple assets, and there are essentially no fees to be part of the fund.
Okay, awesome. The next one is, can one exit the fund early?
Absolutely. We are investors first, as Venu said, and like any other investment, if you want to exit, you can exit. But the only difference is, in this investment, you get 8% cash flow and 12% back-end appreciation. If you decide to leave the investment before the anticipated hold of 3 to 5 years, you may forego any appreciation that you may have accrued until that point. You are free to take your 8% cash flow. Will provide you with your original investment, and that's about it. So you'll forego the back-end appreciation.
Okay, so there is a whole time for like 3 to 5 years, depending upon the property. Okay.
That's it.
So what happens to my investment if, like, TTI discontinues its operation, just in case?
So each asset is acquired in a single entity, and that entity has a manager, which is TTI Capital. And then that entity also has other members who are the investors, usually referred to as limited partners. Let's say if TTI ceases the operations, the members can elect a new manager to run the property.
Okay. So how many members will be allowed into the fund?
The way the fund is structured is, it is structured as a fund of funds. So there'll be several sub funds in the main fund, and it's not based on the number of people, but it's based on the amount of investment. Each sub fund is responsible for bringing in $5 million to the main fund, where sub fund invests in the main fund invests in the assets. The reason why we had to do this is because any LLC which brings in $5 million is automatically given an accredited investor status. So each sub fund could have 100, 200, 300, depending on the average check of investment.
Okay. So the follow-up question would be like, can TTI as a manager, can they form like parallel funds, to reach that certain income requirements?
I don't follow the question, but right now we only have one fund that we are trying to finish funding until end of the year. But in 2021, a fund is really based on an investment strategy, right? So there is no reason why we shouldn't have two funds. But the current fund we have, it follows our long-term investment model, where we the minimum that we look for is a 20% annualized return, where the money doubles in 5 years. So that's the strategy with which this fund operates, right? Let's say in 2021, the market dynamics could change and we could see a short-term opportunity. We could create a short-term debt fund, which would be only operational for 3 years, but it could be a high-risk, high-reward game. And then we could have a long-term retirement fund like this, where that fund could hold for 10 years instead of 5 years. So depending on the market conditions, depending on what we see at that point, we could come up with a strategy, and a fund will follow that specific strategy. So yes, we could potentially do that in 2021.
Okay. So would a potential interested party be required to fund their entire investment commitment at the close of the fund offering?
Yes, the fund, the offering period is until end of the year, and if they do not invest in the fund, which is fine, they could commit, let's say $1 million, and they could only invest 300K. That's absolutely fine. But once the offering period is over, there'll be no new investments accepted into the fund. So essentially, at that point, they would be, if they want to invest, they would have to be part of the next fund.
Okay. So what would be the typical offering period?
Right now, the offering period for this fund is 9 months. The current fund that we have currently active, it started from April 1st, 2020, and it goes on all the way till December 31st, 2020.
Okay. So does the fund own any assets? And if so, what type of assets?
Yes, we have already made our first investment through the fund of $5 million. So we are constructing 330 units, 330 apartments, Class A, in Gainesville, Florida. So that is our first investment, and we are about to close another investment in a month. We are about to acquire 560 unit portfolio in Columbia, South Carolina, and we do have a very strong portfolio. We have another 176 Class A acquisition in Gainesville, Florida. We have a 436 unit Class B in Atlanta, Georgia, another 212 Class B in Atlanta, Georgia. If you add all these up, 2020 we'll be crossing close to 1,500, acquiring 1,500 units in 2020 alone.
Okay, so while making investments for the funds, who will make the investment decisions? Is it mutual educational decision, or who makes those investment decisions?
So as managers, it is our responsibility to make those decisions. The manager of the fund is TTI Capital. The partners in TTI Capital make that decision, and once we make that decision, we present that decision to the investors. We do take their feedback, but the decision is primarily made by the partners.
Okay, so that decision comes from your years of experience in the real estate investment.
Absolutely.
Okay, so then the follow-up question is, how long will it take the manager to invest all of the offering proceeds into the commercial real estate assets?
As I said, if you look at our pipeline, we are about to acquire 1,300 units. The equity required for us to acquire those 1,300 units is around $65 million, and the current fund has another $45 million. So we are at this pace, we might exhaust all the investment for the fund by October or November timeframe.
So is there any room for the investors for the $45 million funds?
Yes, it is an active the fund is an active fundraise state. Investors can come in and be part of the fund at this moment.
Okay. So now related to the risks, so is the fund investing in, how do we know that the fund is not invested into any risky or risk-based assets?
So one of the goals of the fund is to not make any investments which are volatile in nature, and every investment that we make is discussed ahead of time, and we go through a Q&A process, right? If the majority of the investors feel that this is a risky investment, we shouldn't invest, then probably we would not go ahead and make that investment. But as I said, it is our job to educate our investors why a particular investment makes sense. And another reason why we are going down this approach is because anytime when you invest in 4 or 5 assets, 1 or 2 assets, they are home runs, right? They produce above average returns. And 2 of them could be around average, one could be below average. But when you look at all the investments as a portfolio, because of the 2 winners, the entire return is above average. And this is the reason why we are diversifying, so that even if one of the asset doesn't perform as anticipated, the returns are still more than what we are promising. Diversification is the way to go. Diversification across the asset classes, diversification across the geographies, and we don't want to put all eggs in one basket for that reason.
Understood. One may say, like, investing into commercial estate will involve some sort of risk, but at the same time, higher returns can mean more risk too. Like if someone is looking for higher returns.
Right. For example, I'll give you a simple example. If you can make a trade with a click of a button, you click your mouse and you can do a trade of 100,000, and with a click of a button you could also lose 100,000 because it's electronic, right? Whereas in this case, your investment is backed by a physical asset, right? That asset is not going to go away. That asset is not going to disappear overnight. And usually to buy and sell these assets, it takes anywhere between 4 to 6 months. When you have such long buy cycles, sell cycles, it's not easy to buy, it's not easy to sell. When you have this scenario, the value does not drop overnight. Yes, the value goes down like residential real estate or offices or retail. Multifamily is probably the most stable of all asset classes. That is why we are in multifamily. But depending on the location, depending on the market condition, the values might go down, right? What if tomorrow, if the unemployment in America hits 30% and the occupancies across our portfolio could drop by 10%? That's okay, because we break even at 70% occupancy. As long as we pay our bills, as long as we pay our mortgage, we might not get any distribution, but we'll hold on to the asset until the recession is over. And as soon as the recession is over, the market comes back up very, very strong. So the reason why we promote a 3 to 5 years hold is because if we ever hit a down cycle during that hold, we are still able to recover from that. As with any investment, there is always a risk, right? The probability of a risk is much lower in apartments compared to equities or stocks or options or anything like that. There, the opportunity to make money is high, the opportunity for a return is high, and the risk is also high. Here, you will not make 100% in 1 year. But if you make 20% in 1 year, it's a wonderful investment. So for that reason, they are considered a very low risk investment compared to all other asset classes.
Okay. So thank you for the clarification. I have a follow-up question from earlier. We asked, like, if someone wants to exit the fund early, and in the event, if the TTI approves the voluntary withdrawal of their capital from their capital account, there may be some prorated penalty, I guess. I don't know. Can you walk us through again?
There are no prorated penalties. What I said was the investors, they can exit, but what they lose is any back-end appreciation. For example, the way this investment works is on the front end, they get 8% cash flows, and in the back end, when we sell, we realize a 12% per annum appreciation. Since we haven't sold that asset when the investor has exited, we won't be able to give them that 12% appreciation. So they would forego that appreciation. It's not a penalty, but at that point of time, the transaction never occurred. So since they are leaving ahead of the whole period, they would forego that back-end appreciation, but they'll keep the front-end cash flows that they've received until that point.
Okay. So I think we are almost 1 minute shy of 8. We got one last question. That is, how will the fund earn the returns, and when should one expect to receive a return from their investment?
So the fund gets distributions from all the assets that invest in, and the assets give fund a quarterly distribution, and the fund provides quarterly distributions to all the investors in the fund. This is ongoing cash flows, right? Starting from year 4, we start to dispose assets which are in the fund. As I said, usually this process takes anywhere between 4 to 6 months. Our intent is to finish the disposition process in starting from year 4. So we sell off these assets, and as the money comes from the disposition, it flows into the fund, and the fund distributes those returns to individual investors. So we might close this fund in 4.5 years as well, right? It's not a rule that we need to stay until 5 years.
Okay. So I think we are at the 8 o'clock mark, and the viewers are interested in your contact numbers to discuss with you later. So thank you, Ravi Garu. Thank you, Venu Garu. Any last final words? Please share your contact information so that the viewers and interested potential investors can reach out to you.
They can go to our website at tticapital.com, and they could click on investor section. They will be taken to investors.tticapital.com. They could register, and they will see the current fund offering and all the details. And they could also reach out to us. There are phone numbers, there are emails on our website that they could reach out to either Venu or I. But our website is the best way to get a hold of us.
Okay. So Chittaranjan Garu, any last words?
Just wanted to thank everybody. Looks like there were quite a few people who joined on the YouTube side. Last I checked, there were like 35 people there. Hopefully there were some on Facebook and also some on the NRIstream live link as well. I just want to extend my thanks to the TTI team. They've done a great job. And anybody who's interested, as they have said, please go to the website that's being shown here, tticapital.com, and go to the investor section and reach them. We wish you all the best, and everyone have a great evening. Thank you very much.
Thanks, Catch team, for giving us this opportunity. Have a good night.
You're quite welcome, sir.
Thank you all.
Thank you all.
కళాకారులను ఆదుకోవంగా తెలుగు ప్రముఖులే అతిథులుగా ఇది సకల కళల సంజీవనిగా కళల సేవకై పూనుకున్న రంగం ఇది రాజధాని ప్రాంతీయ తెలుగు సంఘం కళల సేవకై పూనుకున్న రంగం రాజధాని ప్రాంతీయ తెలుగు సంఘం కళా సంజీవని. క్యాట్స్ అందిస్తోందిక కనివిని ఎరుగని వేడుక కళాకారులకు కానుక ప్రతిభా పరిచయ వేదిక కళలనే ఆదరించంగా కళాకారులను ఆదుకోవంగా తెలుగు ప్రముఖులే అతిథులుగా ఇది సకల కళల సంజీవనిగా కళల సేవకై పూనుకున్న రంగం ఇది రాజధాని ప్రాంతీయ తెలుగు సంఘం. క్యాట్స్ అందిస్తోంది కనివిని ఎరుగని వేడుక కళాకారులకు కానుక ప్రతిభా పరిచయ వేదిక
కళలనే ఆదరించంగా కళాకారులను ఆదుకోవంగా
తెలుగు ప్రముఖులే అతిథులుగా ఇది సకల కళల సంజీవనిగా కళల సేవకై పూనుకున్న రంగం ఇది రాజధాని ప్రాంతీయ తెలుగు సంఘం కళల సేవకై పూనుకున్న రంగం రాజధాని ప్రాంతీయ తెలుగు